Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick thumbs up that you can hear me and you can see me okay? So you can see my screen, hear me okay? Okay, brilliant, Adinda. Okay, thank you all. Okay, brilliant. Okay, fantastic. I hope you guys are all well. I hope you've all had a wonderful week so far. It's been a interesting week, both in the markets and in life in general. Obviously, with the UK referendum and with the UK voting on leaving the EU, it was a bit of a surprise for a lot of people. Hi B, thanks for coming in. So yeah, it's been interesting. It's been interesting, but that's life. We have to go on as traders. We have to go on. Whatever's happening out there in the world, we can't let that filter into the markets. It filter into our way of trading the markets. I know a lot of people will probably disagree with me on that. I'm looking up at the conversation in this chat room, and I can just see a lot of talk on Fed and Brexit and all various news items. My advice is to really step away from all of that and don't allow that to come into your trading, because ultimately, first of all, that gets factored into the markets, and secondly, news items generally have very little impact on the long-term trend. So if you are looking to trade on news, and if you're trying to trade like the hedge funds, then you would need to do what the hedge funds do, which is they pay a lot of money for news items, which would cost private traders, hundreds of dollars a month to be able to trade like the hedge funds. But most private traders are simply finding news off the internet. By the time you hear it on the internet, it's old news. It's already been factored into the market. Very difficult way of trading. And it's actually a very unnecessary way of trading when it comes to private traders. The best way to trade is looking at technicals and to focus on the long-term trend. Let the markets work for you. Okay, so before we get into the charts, guys, as always, please check out the following website, tdtpro.trade. If you like what you see today and if you want to take things further, then please check out the following website. I always encourage people to look away from free information, focus on training, treat this as a business, and develop your knowledge over time, as opposed to turning to trading as a means to quick riches. It is one of the main reasons why people basically don't succeed. They look at it as a get rich quick scheme, if you like, and it really isn't. Okay, let's move into the charts. Adinda, can I get a quick thumbs up, please, that you can see my trading package? Yeah, I can do that for you, B. There you go. Okay. Yeah, okay, you can see my charts. Okay, fantastic. All right, so this is my charting package. So what you can see in front of you is a typical chart setup of mine. So on the left-hand side, you have the watch list, and notice it's an extensive watch list. So Aussie dollar, US dollar at the top, going all the way down to the South African rand, Japanese yen at the bottom. So it's an extensive watch list. I look at all the currencies pretty much. The reason for this is because money is moved between groups of currencies. So it's groups of currencies that will be in trend. So at the moment, we're very much focused on the pound currencies. They're the ones that we should be looking to extract profit from. But when the pound currencies go into consolidation, then maybe all the Aussie dollar currencies or all the yen currencies or all the New Zealand dollar currencies, they may go into trend. So it's always good to have a macro view of what the markets are doing and then narrow it down to where the money is. Where people go wrong is that they have a limited portfolio from the very start. So they may only look at the euro dollar. They may only look at gold. You already have a limited portfolio. So you're limiting yourself in terms of taking advantage of the best opportunities. What you really want to do is focus. Imagine you're like a hawk hovering in the sky and you're looking down, and below you is the markets. So when you're a hawk, you come down, you pick off the best opportunities, then you fly back up again. Look at the macro view, find the best food, come down, sweep down, take advantage of that, go back up into the sky, have a macro view, come down, take advantage of it. If you're constantly just on the floor, you're just going to be able to pick off what's near you. And it's not the best way of trading. You want to be looking globally and then coming down and finding the best opportunities. That's the way to manage a watch list. So step back. In addition to that, guys, you want to have stocks and you want to have commodities as well in your watch list. You don't want to be just focusing on foreign exchange. People turn to foreign exchange because it's a well-advertised, well-oiled route to quick riches. That is why people focus on foreign exchange. And more often than not, people with no money, people with small accounts trade foreign exchange. Whereas the big dogs, the guys that really want to succeed in trading, they look at foreign exchange, they look at stocks, they look at commodities. They wouldn't just focus on foreign exchange. That's why there tends to be just a lot of FX everywhere because of the way it's advertised. You want to be smarter than that. Okay, moving to the actual time frames. I've got the monthly chart, which with my major levels of support drawn by the green line and resistance, the red line, and the annual levels. So you've got the high and the low and the close of the previous calendar year. So in this case, as we're currently in 2016, this is the high and the low and the close of 2015. On the weekly and the daily, I've got two simple moving averages. Now, my charts, my actual trading charts, they don't look like this. I have proprietary software, I have proprietary trend filters, but just for FX Street purposes, I've used the 200 moving average on both the weekly and the daily. That gives me the bias of the market. And I'm looking at the 50 moving averages to give me the trend. So what I'm looking for in a bearish bias is price to also have a bearish trend, i.e. below the 200 and below the 50. And that is on the weekly and the daily time frame. So I'm looking for price to be below both of these two moving averages on the weekly and the daily in a bear market, and above both of these moving averages in a bull market. In addition, I really want to see price trading outside of these pink lines. So above the high gives me a bullish bias, below the low gives me a further bearish bias. If it's inside these pink lines, basically what price is doing is trading inside a range. And so I tend to stand aside. So remember, guys, trading is all about developing an edge, finding high probability environments, looking for the best opportunities in the market. It's not simply a matter of just trading on a whim or trading on a hunch or what you think or what you feel is happening. It's actually far simpler than that. Trading is about pattern recognition. It's about allowing high probability environments to present themselves. So if you look at the Aussie dollar, US dollar, it's inside these pink lines. That in itself is a reason you don't want to be trading this. So if you are only looking at the Aussie dollar, US dollar, you'd be trading this at a time where you carry serious chance of losses. That is why it's imperative to have a big portfolio, because then if the Aussie dollar, US dollar is not in trend, then we can pretty much guarantee that all the Aussie dollar currencies are probably doing the same thing. It's not a guarantee, but it's pretty much, a given. If you look at the Aussie dollar, Canadian dollar inside those pink lines, if you look at the Aussie dollar, Swiss franc inside those pink lines and consolidating. If you look at the Aussie dollar, Japanese yen, okay, it's below the pink lines, which is great. It has a bearish bias, but it's faced with major support. So until it clears this support, this is not something that you want to be trading. If you go to the Aussie dollar, New Zealand dollar, this looks like the more interesting of the lot because it was in a bearish trend to the downside. It's still inside those pink lines, but what you then need to ask yourself is two things. If it's inside those pink lines, is it trending or is it consolidating? So you can see that price is moving quite nicely to the downside. So if you were looking to take any shorting opportunities, then this is possible, but you want to reduce your risk. So if you compare it to the Aussie dollar, US dollar, the Aussie dollar, US dollar is just going sideways. No real momentum. The long-term trend is bearish, but this is going sideways. If you compare that to the Aussie dollar, New Zealand dollar, we had a trend to the downside. Market then went through a bit of a sideways period, but we're now seeing momentum to the downside. If it breaks and closes below this support, then that is potential resistance and we could see further weakness. So if you do decide that you want to take any trades, you want to reduce your risk. However, what you then want to ask yourself is the Aussie dollar, New Zealand dollar a good trending opportunity compared to some of the pound currencies that are presenting themselves, giving opportunities to themselves? So just going back to the Aussie dollar, US dollar, price is inside these pink lines. In addition to that, it's below the 200 on the weekly. It's above the 200 on the daily. So we have a bearish bias on the weekly, bullish bias on the daily. So there's no alignment in the bias in addition to being inside these pink lines. It's above the 50 moving average. So this is acting as support. And it's now just as of today, trading back above the 50 moving average. So, it is got the 50 moving averages are looking interesting. We still need to see price close above this level. But all in all, there really isn't an opportunity here on the Aussie dollar, US dollar. And that's why you really want to be standing aside. Okay, let's have a look at the US dollar, Canadian dollar. US dollar, Canadian dollar is inside the pink lines. It's still trading below 1.3 round number and this major pivot rather, which is acting as resistance. What we're looking for now is further weakness to the downside, below the 50 moving average, above the 200 moving average. So if price does break below this support level, then we could see further weakness towards the weekly 200 moving average, which is around 1.15. And that's approximately where the low of 2015 is. So we've got two support levels that are right next to each other, well, pretty much on top of each other. If I open up the daily time frame, look at this nice clean trend to the downside. After every move, the market consolidates. This is a natural feature to the markets. Where is it consolidating? Around the round number 1.3. Okay, there's nothing unusual about this. This is the kind of price structure and price movement that traders need to get familiar with. But if you look at what the moving averages are telling you, the 200 is quite flat. The 50 is quite flat. So it's confirming consolidation. And for that reason, this is not really tradable. If price breaks and closes below this low, then we could see further weakness to the downside. And I would anticipate price moving towards 1.2. And then the weekly 200 moving average at 1.15, which is also clustered with the low of 2015. If it clears that level, 1.1, and then that resistance level here. Okay, so nothing really of interest, however. Let's have a look at what's going on the euro currencies. So euro dollar, and again, visited this time and time again. The euro dollar consolidating inside the pink lines. And for that reason, you do not want to be trading it. It makes absolutely no sense that private traders are fixated with the euro dollar. Here is the last time that we traded the euro dollar, and you can see a nice clean trend to the downside. This is why the monthly chart is really, really useful, because it really shows you trend structure and the size of trends. Look at this trend to the upside, then a correction, another trend to the upside, trend. And this movement, this sideways movement, this isn't a consolidation, but it's a wide consolidation in which trends will develop, and there are trends that we can take advantage of. If it's a narrow range, for example, if you look at this area here, it's quite a narrow range for a consolidation. This is not really the environment you want to get caught up in. Whereas here, you've got significant sizes where significant width to the range. So trends will develop inside this range. But currently, and this is another example, you want to be standing aside from this particular area of consolidation. It's messy, it's choppy. If it breaks below this low, then we could see the figure 1 targeted, 0.9 targeted, 0.8 targeted, which is around the 2000 low, 0.7, 0.6. Remember, round numbers act as very good levels that price likes to move towards. If you aren't familiar with round numbers, I don't know how many new people there are in here. If you're unfamiliar with round numbers are every 1,000 pips. I did a whole webinar on this. I think it should be in the archives for FX Street. If you take this high point here, 1.6. If you take these two peaks here, 1.5. If you take this reversal point here, 1.4. If you look at this whole floor around here, 1.2. If you look at where price is currently consolidating, 1.1. Okay, so you can see how significant round numbers are. They are every 1,000 pips. So when let's say price breaks out to the downside, I would expect price to move to the figure 1. This is a major support level, right? The figure 1 is a major support level. So at this point here, price could bounce to the upside. But as a trend would be bearish, I would favor a break to the downside. Of course, we need to see price dictate that. If it does break through, then I would want price to move towards 0.9, 0.8, 0.7, 0.6. These are my levels, and then ultimately 0.5. Now, weekly time frame, below the weekly 200, so we have a bearish bias in and around the 50 moving average, very much in an area of consolidation. Daily time frame above the daily 200 and 50 moving average, just sidewinding. What is this all in all telling us? We are slap bang in the middle of a consolidation. This is a trend. And you can tell it's a trend because of how it was trading below the 50 moving average. And look at the angle to the 200 moving average. That is a bearish trend. This is just a consolidation. Okay. Now, what I wanted to also highlight here is this bar right here, this big red bar. Now, this is because of the result. This is because of the result from Brexit. What I wanted to highlight here, guys, is how price broke through the 200 moving average, which is this black line, broke through 1.1 round number, which is a support level. And the bulls came in and pushed price back above the 200 moving average, showing how significant technical levels are. And we can see this across the board. We can see how significant technical levels are when it came to the release of Brexit, okay? So the euro dollar, not something that I'm particularly interested in at all until it starts breaking out. Let's have a look at the euro pound. Okay, so we had price move to the upside, came towards 0.80. We had a correction to the downside, and since then we've had another big move up. Now, of course, look at the size of this bar. That is because of Brexit, a significant move to the upside, taking price through the high, giving price a bullish bias, taking price above this support level, resistance level, which is now support, through the pivot of the month of April, through the pivot high of the month of April, and the round number 0.80. So all of these levels now, 1, 2, 3, 4, these 4 levels, these are all acting as support levels. What we'd now like to see is further momentum to the upside and for price to move towards 0.90. If it clears this level, then the figure 1. And we can see that price has been near that level previous. Okay, now if we look at the weekly time frame, price is trading above the weekly 200 moving average. If you guys remember, how significant that 200 moving average was, price was struggling to break through it. Price has taken Brexit. The result of Brexit took price crashing through the weekly 200, and we're now seeing further strength to the upside. If we look at the daily, price came to the 200 moving average support zone. And again, you can see significant level. And this is where price bounced to the upside, took price through all of these levels. Now what is happening? We're starting to see a correction back down to this pivot level here. Now what we're looking for really is a correction and a break and a close above this level. This will suggest a continuation of the bull trend. Okay, so euro pound, potentially one that you may be looking to trade, but not one that I would recommend getting involved in just as yet. Now, what I do want to highlight is that there isn't any NFP until next Friday. So if you guys remember, NFP comes out on the first Friday of every month. Excuse me, guys, just grabbing some water. So NFP comes out on the first Friday of every month. Well, it's actually coming out on the 8th. So NFP will be out next Friday. So any trades taken now will be valid trades. I tend to tell people to stay out of NFP until until it's been released, and then the Monday after NFP, we're back to normal. Okay, so let's have a look at the pound dollar. If we cast our minds back to last week, the pound dollar was up here inside these pink line areas, which were acting as a resistance zone. And since then, bang, we've had a move to the downside. And again, this was a big corrective move because of Brexit. Price went through 1.4. Price was trading below the low of 2009. And that went on to create lows which had last been seen around 1984. Since then, the market has rallied a little bit. Is this a turnaround for the pound, or is this just simply a correction before a continuation? We need to let price dictate. If we look at the weekly, below the weekly 200, below the 50, the weekly 50, again, look at the move from Brexit. Price came to 1.5 half figure, came to the weekly, and we had this big bounce to the downside. Again, showing you the significance of technical levels. These aren't just random levels that price just happened to bounce off. These are strategic levels that have been targeted by institutions, and we've since seen significant moves from those particular levels. Here is your correction to 1.5 half figure, and we had this big drop in price. Further, we had a gap, further continuation on Monday, and since then we're seeing a correction to the upside. If we go to the pound, so in summary, what are we now looking for? I should really summarize this. What are we looking for? Well, from a technical perspective, what I'm looking for is this zonal area, this whole zonal area to hold strong. We are seeing a correction back up to it, but I'd like this zonal area to act as a resistance zone, and I would then like to see further weakness, a break and a close below this level, and we would like to then see price move towards 1.3, 1.2, 1.1, and the figure 1. So if you look on the daily time frame, what we're having now is simply a correction. What we're looking for is a confirmed bearish flag. So a break and a close below here was just a continuation. Until then, you want to be standing aside. Now, dynamic traders, we didn't trade Brexit. We didn't actually trade this news. However, once the release of Brexit had come out, dynamic traders started opening short positions below 1.4. So we didn't take this move here because we were flat prior to Brexit, but dynamic traders opened short positions below 1.4, and these positions are now in profit. Okay, let me just go to the chat box, make sure I'm not missing anything. Okay, hi Bill. Right, brilliant. So no questions or anything as yet. If you guys have any questions that you'd like to ask, please put them in the chat box so we can I can answer them at the end of the webinar. Okay, so that's the pound dollar. Pound Aussie dollar, very, very similar to the pound. Remember, all the pound currencies should be doing similar things now. There's your weakness to the downside. We have price trading below the low. So potentially, of course, we need to see price close. And that's only tomorrow, by the way. End of the month is tomorrow. So if price breaks and closes below this low, that's a confirmed potential bearish bias, and we could see further weakness. However, we got that 1.8 round number. Again, showing you levels. Weekly 200. Price has come back to retest it, and it's currently still below it. So we're looking for this to act as a resistance level, but we also want the round number 1.8 to be cleared, and then further weakness to the downside. If you look at the daily chart, you can see how price bounced off the daily 200 moving average, came to around the 50 zone, and then saw indecision, and there's your weakness to the downside. What are we currently having? A correction. Again, what you've got is a resistance zone here. Price coming to retest that resistance zone. A break and a close below this support will suggest a continuation. So we can see how price is just doing what the market does. The only difference is, of course, is we had an overextended bar. So in one day, the price moved potentially what it would move in, let's say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So let's say 15 trading days. So that's approximately 3 weeks. Price did that in a single day. Okay, that's the only difference. Of course, the market has to react to that, and the market has to correct. But ultimately our approach isn't going to be any different. Okay, pound Canadian dollar, same thing as the pound Aussie. Trading below the pink lines, came to that 1.7 support zone, and we've had a bounce to the upside, but it's trading below the pink line low. We've also got some support levels here. We've also got some support levels here where price is reacting to. If it clears the support levels, then we could see further weakness. Price is trading below the weekly 200, below the daily 200, so we have our bearish biases. But until the market actually starts suggesting further weakness, we want to be standing aside. Remember, guys, it's always better to be a little bit late into the trade by letting the market react, or by letting the market establish a trend, and then getting in too early, trying to predict a move and the market going against you. Okay, you can see, looking at the if we go to the monthly chart, you can see how long trends can be in play for. Trends can be in play for months at a time. So it's better to be a few days late and catch the bulk of the trend rather than being too early every time and then keep on getting stopped out. Okay, that's just my advice to you guys. Okay, let's have a look at the pound Swiss franc. Same thing. Again, nothing different. Just, the price structure is different on the monthly chart, but current price action is pretty similar. You can see that it's going sideways. This is one of the only ones of the pound currencies that are still within the pink lines, but quite a significant move to the downside. Long area of consolidation. Remember, the longer the consolidation, the bigger the breakout. So if this trends to the downside, this could end up handing out quite a lot of profit. Is it the best one to be currently trading compared to the pound dollar or the pound Aussie? Well, that's really for you to decide on what you want to put in your portfolio. There is a support level, and you can see how price is reacting to that support level at around 1.3 round number. So again, you can see how these technical levels are significant. If the market closes below this low, then we can look to short it towards 1.2 and 1.1. So I will definitely be keeping an eye out on the pound Swiss franc. I think it looks kind of interesting in terms of how it could trend and hand out profit. So definitely one that I want to keep an eye out on. Pound yen. Okay, so many of you guys know, the regulars on here will know that I was short on the pound yen from around 180. So quite a nice bit of profit. Then I closed my positions just prior to Brexit. And you can see below the weekly 200, below the daily 200. If you look at Friday's Brexit's, if you look at Friday's bar after the announcement of the Brexit results, you can see significant move to the downside. Remember, the ATR for the pound yen is around 200 pips a day. If you look at this, this is 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26. So 2,600 pips. So 10 times the movement pretty much in a single day compared to the average ATR. What are we seeing right now? All we're seeing really is a correction back towards 140. What we're looking for is this level to act as a level of resistance, correction to the downside, a break and a close below this pivot support, and we should see further weakness. So again, pretty much the same thing. What we're now looking for is entry points, and these entry points will be confirmed once we get breakouts. That is the smart approach. Now, if you know how to trade pullbacks, then if you get a good pullback opportunity, if you look at the pound yen, it's pulling back towards a round number, 1.40. Will this offer a good pullback opportunity? Potentially. What I would like to see is a doji or a spinning top suggesting the end of the trend, suggesting steam's running out. And I would then like to see a correction, a break and a close below here. And this is when I'll start looking for shorting opportunities. So at the moment right now, I'm standing aside, but I'm going to assess two things. Am I going to enter on a pullback or a breakout? I'm going to let price dictate this. Okay, and the final currency we'll look at is actually no. We'll have a look at the pound New Zealand dollar. Let's have a look at the pound New Zealand dollar. So pound New Zealand dollar, it's now trading below the low of 2015. However, you've got a major support level here. If it clears this level, then we could see further weakness. But we do also have this level here. So there are a couple of support levels. If this support level clears and around number 1.7, then this would potentially be looking more interesting. But for now, this isn't the better of the pound currencies to be really focusing on. Below the weekly 200, below the daily 200, below the 50, below the 50. So, we do have alignment in the bias. We have alignment in the trend. We have a bearish bias creeping into price on the pink lines, but it's where the support levels are ahead, which is why I personally would recommend standing aside from this. Okay, dollar yen. All right. Dollar yen, well, price is trading below the 100 round number. What we're now looking for is weakness to 110, and it came to 100. Excuse me. Let me just open this chart up. Right. What I wanted to explain to you is this. Again, look at how this technical level was respected. 100 is a major figure. It's a major support and resistance level. In this case, support. Previous, it was resistance, then it became support. So here it was resistance, and then it became support. So it's come back to do the same thing here. It's using that 100 level as a major support level. Until that level's cleared, we want to be standing aside. Below the weekly 200, below the 50, below the daily 200, below the 50. So looking interesting. What we're now looking for is this low to clear. Once price breaks and closes below this level, then we could potentially see further weakness. Okay, so what should we take away from this? What we should take away from this is that we are seeing weakness. We are seeing trends in play. We need to see these trends continue. So we need to see breakouts. Until we get the breakouts, we want to be standing aside. If you get a good pullback opportunity, and if you know how to trade pullbacks, then you could potentially look for pullbacks to set up. In addition to that, the overextended bars on Friday because of Brexit, you can see how the movement actually respected technical levels, round numbers, figures, moving averages. There's nothing price did which is unusual in terms of levels that it met. It was just an overextended bar. Okay, so that is everything that I wanted to cover today. Let me just go to the questions. Bill, can you type in links for your teachings, Periscope, Instagram? Yep. There are, I can do that. I can do that. B, just give me a second. There are a lot of false breakouts from consolidations. How do you avoid false breakouts? Yeah, really good question, Bill. Really good question. By the way, guys, I appreciate questions. So please just type them in the box, because sometimes I don't know who's out there. There just seems to be a lot of talk and a lot of activity until I come on board, and then suddenly people disappear. Which, if you guys are private traders, is a big mistake, because I am a full-time private trader. You should be wanting to learn from someone like me, because I pretty much have the same background as you. You're private traders. You work, you have a job, you have 9 to 5, you have family. You don't work in an institution. You don't, you don't have, I don't know, I'm assuming that you guys don't have degrees in economics or finance. You have degrees in other things. Even if you do, that's fine. But as a private trader, those degrees don't mean anything. So any questions that I get are always very much appreciated. Okay, so right, can you guys see the writing? So I've just done it in blue. Can you guys see that? Can I get a quick yes? Bill, I'm about to answer your question. So I'm using a scribble. I've just changed websites and I'm using a scribble. Oh, actually, hang on. I didn't share my. I know what I didn't do. I didn't share the screen. Bear with me 1 second. Okay, here we go. All right. So, right. Can you see that now? Yeah. Can you see the blue administrator? Maybe you can give me, you tend to respond much quicker than most people. So yeah, okay, fantastic. All right, so question someone's asked me, Bill's asked me, is how do you avoid fake breakouts? Now, remember, guys, you can't totally avoid fake breakouts. Fake breakouts are part and parcel of trading. You can't avoid them 100%. However, you can reduce the chances of getting caught up in a fake breakout. And this goes back to what I was saying earlier. This really comes down to applying patience and letting the market dictate a trend before entering. It's better to enter late than enter early and get caught up in a fake breakout. So how do we do this? Well, first and foremost, I have a rule. Let's say the market is in an area of consolidation, right? And in this area of consolidation, we have a level of resistance and we have a level of support. Okay, now I have a filter. My filter is simply a 60-day rule. Okay, a 60-day rule. If this consolidation is less than 60 days, I take the first breakout. If this consolidation is greater than 60 days, I take the second breakout. Okay, so let's assume that this area of consolidation is greater than 60 days. If this area of consolidation is greater than 60 days, I'm waiting for a breakout. So here is our bullish breakout. Now, first and foremost, I want a break and close. End of day. This is really, really important. All too often, what traders do is they wait for this resistance level to be cleared intraday on a 15-minute time frame or a 1-hour time frame. They enter long and then the market reverses back into this consolidation. The market reverses back into the consolidation and stops them out. So the first thing to do is wait for the market to close end of day. Second, wait for a retest and second breakout. What do I mean by that? What I mean by that is wait for the market to retest resistance, which is now support. So it was previously resistance and it has now changed to support. So wait for price to retest that. What we then have is a new pivot level, and what we want is the market to then break and close, and this is where you can enter because you now have a much higher chance of the market trending to the upside. So that is how I avoid fake breakouts, or I reduce the chance of fake breakouts. I apply my 60-day filter. Greater than 60 days, take the second breakout. Less than 60 days, take the first breakout. Now, also, when it comes to your risk, if you want to test the waters, always reduce your risk. So less than 2%. So my initial trade, regardless of whether it's on the first breakout or the second breakout, after a pretty long period of consolidation, my first trade may only be 1%. However, my subsequent compound positions, remember, I don't close positions. I let my winning positions run. So maybe this one would be 1%. But then as I start compounding, I will start increasing my risk back to 2% because I have full confidence that a trend is in play. Of course, I have well-placed stop losses. I have trading stop losses. I compound strategically. You know, it's all well thought out. It's all methodical. It's all slow and simple. Okay, so you know that's basically my answer, guys. That is how I avoid fake breakouts. Bill, I hope that answers your question. Okay. I'm not sure how you guys are trading. And by the way, guys, I should stress out that this is on the daily time frame. Okay, because it's on the daily and the weekly time frame where I enter and manage stops. Sometimes I enter on the weekly time frame and manage my stops. Sometimes I enter on the daily time frame and manage my stops. I never manage stops on a lower time frame. Okay, right. Okay, so that's everything, guys. Thank you all very much. I'll just put some of these links across. So there's the link to the website, tdtpro.trade. If you have not read this ebook, this is a fundamental place to start. trendtrader.pro/ebook. You must read this ebook, and it explains a lot of how to read candlesticks and chart patterns, and how to avoid fake breakouts, moving averages. There's just a lot that goes into that ebook, and it's the kind of ebook, guys, that the information on that ebook is not going to be found readily available on the internet. In fact, that ebook is changing the game. If you have not liked the Facebook page, guys, please, I'm putting the links across now. I don't know if you can see the links, they're in the chat box. I'm actually putting the links there. If you haven't liked the Facebook page, I have a new Facebook page here, FX Stocks Trading Community. So facebook.com, FX Stocks Trading Community. A lot of information on there. So tips, questions of the day, charts, just a lot of information on this Facebook page. So if you have not liked the Facebook page, please like the Facebook page. Twitter as well. All right, there is your Twitter links, course, Periscope, Instagram. I'm doing a B. I don't know if you can see the links. but I'm putting them in the chat box right now. So all the links are coming through. If you can't see the links, then what I would do is just email me on Zaheer@tdtpro.com. Excuse me, Zaheer at. Okay, here is my email, Zaheer@tdtpro.com. Let me just do this here. Okay, if you email me on Zaheer@tdtpro.com. Okay, if you guys email me on this, Zaheer@tdtpro.com, I can then email you across all the relevant links that you need. Okay, so please drop me this email. I'm not sure if everyone can see the links coming through on the chat box. Okay, right, that's everything, guys. TDTpro.trade for training, trendtrader.pro ebook, trendtrader.pro/ebook for the ebook. Facebook.com/FX Stocks Trading Community. Also, Twitter and Periscope. This is essential that you guys follow me on Twitter and Periscope. Dynamic Trader. If you do a search for Dynamic Trader on Twitter and then do the same on Periscope, I can then add you. You'll then be alerted to when I do Periscopes, and I do Periscopes pretty much on a daily basis. Okay, brilliant, B. Okay, fantastic. Okay, right, that's everything, guys. It's pretty much Q2. It's 4:43 here in the UK. Thank you all very much for coming into my webinar. Thank you, Adinda and FX Street once again, and thank you for all the questions, guys. And I will see you all next week. Actually, yeah, I'll see you all next week's webinar. Thank you very much. Take care, guys. Thank you. Bye-bye.